All right, let's get right into it. Have you ever felt like you're playing a game, but you're the only one who doesn't know the rules? Well, today we're going to pull back that curtain. We're going to see how the biggest players, the whales, really run the show in financial markets. It's time to start seeing the game through their eyes. And we're going to start with this quote because it's a bit of a bombshell, isn't it? But according to the elite trader Moneytaur, whose insights we're breaking down today, this is step one. You have to accept that the market isn't a level playing field. It's a system that has been engineered from the ground up. And this right here nails the central conflict. See, we think the titans are fighting each other, but that's not the real game. More often than not, they're working together. The real battle is between them and the average person. You know, you and me. And if we get wiped out along the way, that's just part of their business plan. So if it's not just a bunch of billionaires in suits, who exactly are we talking about when we say whales? It's easy to picture some person making these moves, but the reality is way bigger and, honestly, a lot less human. Because the real whales, they're algorithms. We're talking about multi-billion-dollar trading bots run by massive institutions. These things operate around the clock, they have zero emotion, and they can execute trades with a speed and a size that no human could ever hope to match. This isn't a human game anymore. And when you put the two side by side, the difference is just staggering. On one side, you've got us, the retail investors. We tend to be emotional, we react to headlines, we chase the latest shiny object. And on the other side, you have the whales. Or more accurately, they're bots. They are surgical, patient, and here's the kicker. They don't follow the news, they create the news. They literally engineer the stories that retail investors end up chasing. So the big question is, how do they actually do it? Well, let's open up their playbook. This is where we break down the exact tactics they use to shape what you think, what you feel, and ultimately where the price goes. This right here, this is the core idea you have to get. We're all taught that good news makes the price go up and bad news makes it go down. The whale knows the complete opposite is true. The decision to move the price is made first. The news is just the story they release later to justify the move to the public. And their toolkit is pretty sophisticated. They engineer these long-term narratives, they weaponize the news to create either extreme FUD, that's fear, uncertainty, and doubt, or intense FOMO, the fear of missing out. They use their bots for perfect execution, and they use technical tricks like spoofing and setting psychological traps to lead the herd right off a cliff. Let's look at a perfect example. A fake tweet goes out from a huge crypto news source. Bitcoin ETF approved. The price instantly rips upward, wiping out anyone betting against it. A few minutes later, oops, our mistake, that was fake. The price then crashes, wiping out everyone who FOMO'd in at the top. The news was fake, but the money that moved from retail pockets to whale pockets, that was very, very real. Or how about this classic trap? A huge respected figure like Michael Saylor announces he's brought a ton of Bitcoin. The public hears this and thinks, wow, bullish, and they rush in to buy. What happens? The price immediately dumps. Why? Because the whales used all that excitement and all those retail buy orders as the perfect opportunity to sell their coins at a great price. They use the herd as their exit. And believe me, it works just as well the other way around. Right at the absolute bottom of the 2022 bear market, what happens? The Bank of England comes out and warns of the longest ever recession. This is maximum fear deployed at the exact moment they want you to panic and sell your assets to them for pennies on the dollar. They manufacture the fear so they can buy cheap. Now let's talk about a more technical tool in their kit, spoofing. Think of this like a magic trick. A whale will place a gigantic buy order on an exchange. It looks like someone is about to buy millions of dollars worth, creating this illusion of massive demand. But they have zero intention of actually buying. They just want to trick you into buying, push the price up, and then they sell into your buying pressure. And here's a look at spoofing in the wild. A $75 million buy wall suddenly appears for this crypto token, VRA. Social media goes crazy. Everyone's hyped up. This is gonna moon. But it was all a trap. That order was a ghost, a spoof, designed to lure in buyers just moments before the whales dumped the price. So here's the thing you absolutely have to remember. It's not emotional people making these moves. Over 80% of all trading is done by bots. And these bots are programmed with one primary directive: hunt liquidity. Think of liquidity as the big pools of money on the chart. All the stop losses, all the liquidation levels. The bots are designed to sniff out those pools and attack them with surgical precision.
But here's the good news in all of this. These bots, these whales, they leave footprints. See, their orders are so huge, they can't sell everything at once without completely tanking the price. So they have to sell in chunks. And that creates these heavy supply zones on the chart, like these red boxes. And what you'll notice is that the price gets rejected from these zones over and over again. If you can learn to spot these footprints, you can start to anticipate their moves instead of just being a victim of them.
Now, I know this might all sound a little depressing, but knowledge is power. And this last part is all about making a crucial shift in your mindset. It's time to stop thinking like prey and to finally start thinking like a whale.
So this is the million-dollar question, isn't it? If the game board is tilted, if the other team wrote all the rules, how on earth can you possibly come out on top? The answer is you have to completely flip your perspective. You have to stop being a piece on the board that just reacts to their moves, and you have to start thinking like the person who designed the board in the first place. You have to look at the market through their eyes.
You see, a retail investor always asks the same question. Where will the price go? A whale, however, a whale asks a totally different set of questions. Let's look at the mental framework they use to build these market traps.
Just listen to these questions. They're not about predicting anything. They're about creating an outcome. How can I deceive the most people? What pattern can I paint on the chart that will trick them into feeling bullish? How do I manipulate their emotions? And the big one, where is the liquidity? Because that's the prize. That's the fuel for the entire machine.
This quote right here just says it all. We're taught to think that world events happen, and then the money moves in reaction. The reality is the complete opposite. The decision to move vast amounts of money is made first, and then the world, the news, the narratives, the whole story is bent to make that move happen. So, what's your new playbook look like? Well, number 1, question consensus. If everyone on Twitter is screaming the same thing, that is a massive red flag. Number 2, read the footprints. Find those heavy supply and demand zones on the chart. 3, decode the news. Understand that good news at the top and bad news at the bottom is a weapon. And finally, number 4, think like a contrarian. The herd isn't your guide, it's your signal to look the other way.
So in the end, the choice is really up to you. You now know that the game is rigged, but you also know that the script can be read. The question is, are you going to keep falling for the same old tricks? Or are you going to learn to read the script before the next scene plays out?